All right, if you've been watching my predictions for 2024 video, this is a deep dive on one of those stocks, SMCI. If you haven't watched that, go back and watch that. It's predictions for 2024. You should find it here on the channel. One of the stocks is called Super Microcomputer. It's a funny name to me because like some kid made it up. You know what? I'm going to create a company called Super Microcomputer. Anyway, it cracks me up. Let's start here on the left side, like I always do on the fundamental side. If you're not in the stock, that's where you should start. And you start, looking at 2021, $2.48. Then it doubled that and 565 in 2022, more than that, right? And then you're talking 2023, it doubled it again, basically going to 1181. Now in 2024, it's expected to continue its growth to 1747, another, I don't know, $6. That's pretty good. Geez, this company's growing like crazy. And then next year, it's continuing its growth. So you can see, if you look at the bottom, it's got double-digit and triple-digit earnings per share growth numbers projected and reported. And then in the sales side, it's got double digits most of the quarters, right? Quarter over quarters are double digits and pretty high double digits. Of course, it's slowing down a little bit because it was a very fast-growing company, and now it's still growing very quickly, but it's hard to continue to double your earnings per share and double your sales. So things are going to slow down naturally. But if the company can handle it, if they do a good job, then great. And one way to tell if they do a good job is to look at return on equity. And return on equity is about 40%. Well, that's pretty darn good with very little debt. So that's how I measure management's ability to handle your money, right? Is the return on equity. So they're at 40% return on equity and earnings per share growth rate. Now, this is a blended rate from MarketSmith. By the way, thank you, MarketSmith. This is good software that I get to use. But that is 45%, a blended rate of 45%. Now, I like 20. So if I can get 45%, that's really great. So that's the left side. That's the fundamentals. And I always look at fundamentals. And if you don't have MarketSmith, they're great, but you can also get it from finance.yahoo.com or finance.google or lots of different places out there, your trading system. But this just has it all in one place for me, so I like it. Anyway, and I don't get anything out of saying that, by the way. Okay, so let's look at SMCI. You can see that it had a beautiful run up, like it just a nice upsloping chart, and then all of a sudden it kind of went parabolic here. I don't really love when things go parabolic, but this one at a fairly decent angle, not a crazy parabolic, straight up hockey stick angle, right? So you can see that the stock consolidated, traded within a range for, a couple of months back in March of 23, and then it took off. And you can see that when it took off, it went from about 70 to 340. So, boy, it would have been nice to be in that one, right? Catching that up. That's what, a 270 point gain, right? So it went up 270 points. Of course, there's sellers up there. And so it's had a big sell-off day on earnings, and then it hovered around below its 50-day moving average or the 10-week moving average here. And it bounced around there, and it's been bouncing around there for 3 months. And you know what I always say, when something kind of stays within a range, kind of like it did before it really made this run, it coils the spring. And the longer it stays in a range, the longer it coils the spring. And when it coils the spring longer, it's a stronger breakout. It's just what I've seen on my pattern recognition stuff over all the charts I've looked at over all the years. So you can see it's been coiling a spring basically between about 235-ish to, the high of 340. Somewhere in there is a lot of the spring coiling going on, more around $300 level, right? So there's no other sellers, right? This is an all-time high for the stock. So there's no other sellers there. So what you're probably going to see is a major coiling of the spring, probably a test of that 200-day moving average as it continues to climb. And it's certainly testing the 50 now. And that's okay. It's all on fairly benign volume. And then once it decides that it wants to break out, probably in another month or so when it has numbers, it's going to find a reason to either break up or break down. And we're hoping it's a break up. And that means it's going to run. Now, the way the markets work is they have symmetry. And so this stock ran up 270 points. And so I think it may run up another 270 points. I know it's crazy to even think that. So I'm not going to say that that's the prediction that it's going to run up another 270 points, but I will say there is a good probability that it will. And it will do that from probably the $230, $240 level. Okay? So if it does that, we're talking about a $500 stock. Okay? So Just be ready. If you want to have an initial position, you can take a very small position, but there's no reason to buy the stock yet. The reason for this video is to keep it on your watch list, because this one, in my opinion, has a high probability of breaking to the upside. And if it does break to the upside, you want to have some of it, but you want to have it at that high of around 340 something, okay? That's the spot where if it breaks above that on good volume, there's nothing to hold it back, just in general. So it's got to have some good volume, and it's got to get to that spot. But you want to be in it, you know, down here. It's at 285 now. You could pick it up before it gets to that pivot point, you know, a little bit here, and then a little bit more there, and then that's the real spot where it's going to do the testing. So that's the way I read the chart. I have a $500 target on the thing for the year, but I would say for the year, it's probably $400 just to be safe. And $400 gives you a nice round number that it wants to go to before it goes to that $500 level. So that's how I read SMCI. You know, it's still got a lot of potential, even though it's already run. I think the run isn't over.